hear me now?
Okay, we can hear you.
Okay. No one responded to anything I said earlier. First and foremost, attitude check, Margie. Um, Thank you for the opportunity. My name is Jonathan Autry, currently the branch manager at First National Bank in Greensboro, North Carolina. I manage two different branches. Um, and I'm simply tasked with helping financially active people do something different, do something more, earn more money, save more money, or just find financial success within what they can do. So I talk with a lot of people from different walks of life, and it's given me a lot of different experience, over time. So impacting people for me is the driver. Regardless of it's if it's in the bank, if it's outside the bank, if I have the opportunity to impact, that's what I'm about. I do that in the various nonprofits, and I do that on a daily basis at the bank. With that being said, we discussed a couple of weeks ago about setting up your business, the fundamental basics of a business. What makes you lendable, what makes you bankable from the bank's perspective. Today, we want to talk a little bit about credit. Um, when it comes to credit, why it's important, what it can help us do, and how it can hold us back if the credit's not where it needs to be. So up front, discussing and understanding credit, you have to know what it is. And this straightforward definition of credit is the ability to borrow tomorrow's money to pay for something you get today. That's it. At the very end of the day, I can't afford it today. So someone's going to help me and lend me money to pay for it. It comes in various formats and different ways. So at the very end of the day, you're going to be in a couple of different positions. Either you have absolutely no credit, either you have good credit, maybe you have bad credit, or maybe you're rebuilding credit. And those are four different stages that you'll find yourself in. So if you have good credit, congrats. At the end of the day, you're doing something right. And when businesses and institutions look at credit, what it does is tells us a story of you, your character, and how you repay your debts at the end of the day. It won't tell us how you treat your friends, but it tells us how you treat your obligations. And if a bank or any other institution is going to take the opportunity to become an obligation to you, they want to make sure that you're going to pay them back. And how do they do that? They look at your credit. That's exactly what they do. So when identifying credit, what it is, what it allows us to do, purchase homes, cars, gifts, vacations, everything like that. When you think about the flashy things, the things that people have, but understand that your car insurance is affected by credit. Your ability to move into an apartment could be affected by your credit. What's another one? I don't have one right now, but it goes a bit further than just I have this card, I want to go buy something. So credit affects every aspect of our life, and I want you to think of it as basically it is its own creature. When it boils down to it. So the information on the credit report is what people use to assess if you're going to pay them back. But you have to understand what's on the credit report. You have to understand the makeup of it. What are they looking at? Are they looking at your payment history? Are they looking at how much credit you have? Are they looking at how many times have you run your credit? So right now, to get a simple breakdown of what your credit file looks like, so to take into consideration a couple of different things. So payment history, looking at payment history, how well do you pay your bills on time? Because if you're going to pay me back and you say you're going to pay me back on a certain day, well, that's when I expect it. So payment history, how well do you pay your bills on time? And I'll give you a side note with payment history. You will not get a negative rating until you are 30 days past due on anything. You'll get a fee, from the institution, from the bank, from the lender, but the lender will not report it until it is 30 days past due. So you have a 30-day past due, 60 days, 90 days, so forth and so on. But there's a bit of leeway till you get there. So that 35% of your credit makeup is just that, your payment history. The next biggest rock on your credit is going to be your outstanding debt. Outstanding debt's 30%. So you have payment history, which is 35%, outstanding debt, which is 30%. Collectively, that's 65%. So you mean to tell me, keep your debt down, pay your bills on time, that's 65% of the battle. Very easy to do. Very easy to do. So when they think about outstanding debt, they're looking at the amount of money you owe in comparison to what you have available. So for instance, if you owe $5,000 on a credit card that is $5,000, it's going to show that your credit is maxed out and you don't know how to basically control your debt, right? Doesn't make you very appealing at the end of the day. Now, if you owe $500 on a $5,000 card, the bank's going to look at it like, well, this person, they really know how to manage the debt. We feel comfortable lending them some more money because they're just not going to go out and run it up. Now, those are two different extremes. Now, imagine if you have a $300 card and you charge $300 on it. Well, you don't have a lot of debt at that particular moment, but the credit that you have that's available is maxed out. So they're going to look at it the same way they look at the $5,000 balance on a $5,000 card. So sometimes, lower balances will hinder us because if we're utilizing them, then it looks like our credit is being maxed out when it's really not. It's just all that we have. So we have payment history, we have outstanding debt, and then we have credit history. Credit history is basically the length of time you've been in credit from the first time you've established credit. So we're looking at that history. So when you open up your first credit account, objectively, you want to keep it as long as possible because people are going to look at stability. People are going to look at, he's had or she's had this ability to maintain a relationship with an institution for this period of time, makes us feel comfortable so we can lend them some more money. That's just something else that will go into it. So now we have payment history, outstanding debt, and credit history. Credit history is 15%. Next, we have new credit inquiries. New credit inquiries are roughly 10% of your credit makeup. And a credit inquiry is anytime you apply for something. You go apply for a loan, you apply for a mortgage, you want to get pre-approved, things like that. Those are credit inquiries. Now, there are two different types of credit inquiries. You have a hard inquiry, you have a soft inquiry. At the end of the day, the difference is they affect your credit completely different. Typically a soft inquiry, what it won't do is, I'll answer the mortgage question in just a second. If you have a soft inquiry, what it does is basically just kind of gives us a small detail of where you're at. It doesn't go in, it won't give a thorough, listing of things, just kind of gives a small detail, gives an idea of how your credit is. Hard inquiry, well, that is, we're checking your credit and we're looking to see everything that you have, right? So of that, anytime you run your credit as a hard inquiry, as in buy a house, buy a car, apply for a credit card, apply for a personal loan, apply for a secured loan, any of those things, what it does is it's going to take off roughly 6 to 9 points from your credit score. So imagine, where we're at. You run your credit 10 times in one day, that's 10 times 90, that's 90 points potentially that could be off your credit. So we'll get to that in a second. Looking at the credit mix is the last component of your credit makeup. So you have payment history, outstanding debt, credit history, new credit inquiries, and then credit mix. Credit mix is the types of credit you have. You have revolving, which is lines of credits and credit cards. You have installment, which are personal loans and auto loans. You have mortgages, which are just that, mortgages. So they'll look at everything in its totality and say, okay, there's a pretty good mix there. This person effectively knows how to manage credit and can do it in a couple of different formats. We feel comfortable with loaning some money. Those are what people are looking at. So now we have what it consists of, what the credit consists of at the end of the day. Now, there was a mortgage question that basically said, if I believe it was, if I'm pre-approved with a lender, does it hurt to apply somewhere else? I believe that was the question. So I'm going to answer that. If I'm wrong, just let me know. But I'm going to answer that. At that very moment, not necessarily. Not necessarily. If you're buying a home is a process. So typically the way it goes, you go in, you get pre-qualified. They kind of give you what to work with. You find your house, and then bang, they run everything. And that's when there's a hard pull on your credit. At that point in time, you should have a rate lock. They should tell you, hey, we've run your credit, we've done your income, everything is good. Only thing we have to do now is the title search and the appraisal. But this is going to be your rate term and everything, what have you. So after that, it really shouldn't hurt you if you used to go somewhere else. But if you go somewhere else and you don't finance there, they're going to want to know why you ran your credit elsewhere during that time. And they will tell you not to do that. One, they don't want to lose that business, but two, running your credit again may potentially be harmful to what you have going on. So I believe Margie just said we'll answer some questions at the end. So that's fine. So looking at, what affects the credit, what's on the credit report, so we've gone through credit inquiries, soft inquiries. We've gone through the credit makeup, what's on there. So now let's look at, those 4 different areas where we're at before. You have good credit, you're establishing credit, you have poor credit, or you're rebuilding credit. So poor and rebuilding could be classified in the same junction. It really could, but the way we look at it, 2 different ways. So first and foremost, you have good credit. Congrats. We'll move on to the next one. Establishing credit, the easiest. This is the easiest portion of it. So establishing credit, and by easy, I just mean simple, because nothing seems to be easy. You're 18, you're 20, you're 25, it might be 30. You have absolutely no credit, or you haven't used your credit in 12 years. You know what? Credit file is empty right there. So they have nothing to go on. And you're not going to go get approved for, a $30,000 auto loan at a good rate because you have no credit. You have nothing for us to look at. So how do you get credit if you have none? Well, that's a great question. So with that being said, there are a couple of different institutions and companies out there that will give you, small amounts of credit to kind of start off and get you rolling. Essentially, one of the easiest things that you can do is to be added as an authorized user to someone else's credit card. So it could be family member, friend, it could be any of those things. But if you're added as an authorized user, now added as in they have to have your social security number, so it starts reporting for you. That's the easiest way to establish credit. Now, how many people you trust well enough that will allow you to do that? Pretty tough question. So that's an easy way to establish credit. There are a couple of different companies like Capital One, Credit One. They have lower limit debit credit cards to kind of get that thing flowing. Now imagine, the first thing you do is you get a credit card. Now you got a credit card, you got a $300 limit, you got a $400 limit. Well, imagine this. So if we go backwards and we go max it out, but it's just going to pull our credit score back down. So we establish some credit, we leave it there, and we continue to build on it. Bank of America also has a pretty good secured credit card program. I think it's $99 and get like a $500 credit card. So those are a couple of different things to kind of help put credit back out there and get it back on the map. Now, so that's establishing credit. What if you have poor credit? Poor credit, you have late pays. You've been behind on bills. We're just going to stick with that. You've been behind on bills. You couldn't keep up. Maybe you maxed out your credit card. It's over the limit. Any of those things, they're going to negatively impact your credit. So at that point, your credit is not as good as it could be. So you have these things on your credit. What do you need to do? The first thing you need to do is call your institution. Call the lender. Whether it's a credit card company, whether they loan you money for vehicle, whether it's your mortgage company, call them first step. I would say it's about a 30% chance you'll be able to talk to them. You know what? Sometimes they'll just pull that late payoff. They say, hey, you know what? You're late. You know, we understand what was going on. We're going to remove that for you. It's possible, but that is always your first step. So that's the easiest move to do. I don't know what that was. Okay, so you know that's simply we have poor credit. We're trying to get our credit back. So kind of working through some late pays or some over limits, things like that. Well, that is going to take time. That's what it's going to do. Once you get it back to a certain point, it's just you have to keep it there, and it takes time. Typically, inquiries stay on your credit report for 2 years. You apply for direct TV because you want some satellite, that inquiry will stay there for 2 years. Then it will fall off. Going forward to rebuilding credit. Rebuilding credit is, maybe you had a tough time, you had bankruptcy, or you just had everything charged off. Maybe in a position like that. Well, your road's going to be a little bit tougher. But again, your biggest obstacle is time. It's patience, it's waiting, and it's allowing time to pass for those things to eventually fall off. But in the meantime, you can try to negotiate with, your lenders. If you let them charge off, if you file bankruptcy, that bankruptcy is just going to stay there. All your debt will be gone. All those items will stay on your credit report, but all your debt's going to be gone. Today's day and age, bankruptcy is used as an essential tool, depending on who you are, what you have going on. And at that point, people will lend to you again, typically in about 2 or 3 years. And I'm not saying that's a good thing or you should do it. But if in fact that happens, it's not the end of the world because you will be lendable again sooner than you really think. So that's good credit, that's poor credit, establishing credit, and then rebuilding credit. With those things, people want to know, what an average credit score is. How does it fluctuate? What are my parameters? So, believe TransUnion, we go up to 900. Equifax goes to 850, and Experian, not too sure. Different organizations and institutions use different credit monitoring services. Those are the three: Equifax, Experian, and TransUnion. Equifax, in my experience, is the stingiest, will always give you the lowest score. Typically, if you go to borrow money and you want to buy a home, they're going to use your Equifax score. For instance, my particular bank uses TransUnion. Most of the time, that's the higher of the scores. If you can pay off your charge-offs, pay your charge-offs. If you can pay them off. Because they're just going to sit there. And the longer they sit there as like someone is bought and holding that debt, they'll restart that time, and that 7 years may never fall off, it seems like. So if you have the means, pay off your charge-offs. If you have the means, just pay your debt down. Forgive me, I lost my space there. So on a sliding scale, what the credit score is, typically good credit is classified as anything above like 690 or 700. And what that means is it allows you to go in there and basically have the buying power to buy whatever you want to buy. So the difference between good credit and bad credit at the end of the day is rate. You want to buy a house, you have great credit. This day and age, right now in this pandemic, you may be able to get a rate as low as 2.25, 2.5, 2.75, depending on the term. That's great credit. You got poor credit, you might get 6%, right? You can say, oh, well, it's not that big of a deal, but isn't it? When you think about things in their totality, it is a long journey we're in. Credit is a long journey that comes with us. So let's say, for instance, you got it together, you got good credit. You find the house that you want to buy. So you know what, we're going to go buy it. It's $125,000. Cool. So you got a house, you got a good rate. My mortgage is at 3%. I got a 30-year term. And to give you guys an idea of what that is, 125, 30 years, 3% is about $530, right? It's very doable. Good rate, good rate. Now, you know what? Let's say, for instance, hey, it's been tough, man. I had probably 3 or 4 late pays last year. They're still kind of there, but we want to buy a house, and I think you have a good opportunity. So you find a house, $125,000. You know what? You get a 30-year mortgage. Unfortunately, your rate's not 3%. Your rate's 6. Doesn't seem like a big deal today. That's about a $200 difference in the amount you're going to pay for your mortgage on a monthly basis, right? Add $200 to that for 30 or 12 months for 30 years, easily $80,000. And that's the difference between today's good credit and bad credit. So it makes a world of difference, but people won't think of it quite like that. So understanding credit, where you're at, how to get to it is important. So we went over the credit bureaus, we went over Equifax, TransUnion, and Experian. There is a website, it's called annualcreditreport.com. It's been around for a long time. And what it is very, very helpful for, ordinary people like myself, because I can get on there and I can track my credit. You get one pull every year. So you say, hey, I pull it every summer just to kind of see where I'm at. One, make sure no one else is trying to use my credit. Make sure everything is reporting accurately is important too, because sometimes it may report incorrectly. So you can go to this website, it's annualcreditreport.com, put your information in there, and what it does is it pulls your credit from all 3 bureaus. It does. Now, that's free, absolutely free. You look at it, you go through it, and maybe you figure out, you know what, Chase said I was late. I was never late. Let's call them. Maybe you find some little things like that, but it just kind of puts things in perspective for you. So once you do that, you have the opportunity on that same website to get your score. Depends on where you're at in life and what you have going on, whether that's important or not. Now, that's going to cost you $3. I think it may cost like $12 to $15, if I'm not mistaken. But if you need the score, then you can pay for it. If you don't, then you just get a free credit report of what's on there. One more thing the website will allow you to do is to, what's the word I'm looking for? It is evaded me, but it allows you to negative marks. It allows you to, I really lost it. Basically, the negative remarks you can go in and dispute. That's what it was. Dispute allows you to dispute. Hello. So you have the opportunity to dispute your negative remarks right there on that website. And not only that, you can actually go directly to the Equifax, Experian, TransUnion website, or you can call them on the phone. Calling them on the phone is like calling the IRS. You're gonna hold forever. But they are accessible. Now, a lot of things that we went over, time. It's time and patience. It doesn't happen overnight. You don't wake up with a 750 credit score. If you had a 600 credit score 3 months ago, it's going to take some time for it to get to where it needs to be. Now, the concept of credit, and it's easy. It's simple. It really is. It really is. The discipline of budgeting, it's not. That's the difference. Budgeting creates an opportunity for you to do what you want to do, but it's a discipline in a different area of your life. That is the single reason people can't manage credit. I got a credit card, it's got $5,000 limit. We're gonna go to the store. Hey, I like this suit. Let's get 2 of them. It's gonna be something to eat. We're gonna get some gas, so forth and so on. Next thing you know, you got $5,000 credit card bill, right? And very little to show for it. So the credit itself is pretty simple. The discipline behind it is the driving factor, right? So that is personal credit basically in its totality. Now, there's also business credit, so you have personal credit and you have business credit. What's the difference? The business credit actually goes on an entity, so we won't go as in depth with the entities, but business credit and personal credit, this applies to business owners who want to borrow from the bank in the name of the business. When we discussed last time being bankable, when you go up there and you want to make this loan, or you want to create this account or whatnot, the bank is looking at The ability to repay. How has your business paid its debts in the past? And maybe you say, hey, I've only been in business since 2017. Okay, well, so your business doesn't have credit. We're going to look at your personal credit, and then that's what they're going to look at. So it all boils back to you, how you manage your finances, how you manage credit, how disciplined are you, is what it boils down to. Some things to take into consideration uh, when you want to borrow money. I tell everyone, credit tells me yes or no, income tells me how much. Because now we have a debt to income issue. The bank, our fiduciary responsibility is to help you, not put you in a poor position in any type of way. So if you have a $10,000 credit card at Chase, and for some reason you want a $10,000 credit card at First Citizens, and you're like, you know what, I'd like a $25,000 credit card at Wells Fargo. You know what's going to happen? They're going to start saying no at some point because all those things maxed out. You probably wouldn't be able to pay for it, and that's what the bank looks at. So you say, "I want to buy a house. How much house can I afford?" And you want to think about what they're looking at. So we go into full credit, decent credit. We're looking at our income. So let's say your income is $4,000 a month. Um, and you want to buy a house. The bank does not want your mortgage to be greater than 28% of that, of the $4,000 a month. They do not. Why? Because it's potentially going to put you in a poor position overall. So you imagine that's just of your mortgage. Typically, overall, if you want to, borrow money, buy a house, the bank will only allow you to go up to about 43% debt to income. That means every debt item you have, credit card, car, motorcycle, boat, house, or everything that you have added together collectively cannot exceed 43% of your month's income. So if your month's income is $4,000, 43% is roughly what are that, 1,800? So we'll call it around 17, $1,800. So everything put together, they won't allow you to exceed that. Why? Because we know you have other things to pay for. You have to eat, you have gas, you have insurance, you have children, childcare, expenses, pleasure, leisure, you name it. We get that. So there's plenty of leftover for that. And the bank is protecting you and it's protecting themselves. So that's what happens when you look at it. But imagine, right? So your debt to income is maybe it's on the cusp. Like we want this house. It's a beautiful house. The payment is around $1,500, and we just can't afford it, right? Because our rate is 6%. Imagine if you could drop that in payment $200 because your credit was maybe 70, 80 points higher. Would it be worth it? I think it would. I think it would. And that's typically what happens. So people will say, hey, no. Let me get my credit right. Let's wait a second. Because when I enter into this contract for the next 30 years, I want to ensure that I'm saving that $200 every month as opposed to giving it to someone else and paying interest and collectively paying for the price of a BMW when I'm done with everything. Because you know what? I made a couple poor decisions when I was younger. No, that's not what it's about. So, no business credit. We're going to look at personal credit. Personal credit is going to affect what you can get, what you have the ability to obtain. It's going to affect the type of rates you get all across the board, whether it's interest, whether it's insurance. May even affect whether you get selected for a position, different an opportunity. You imagine I work at the bank, they run my credit. They're there all the time. So if I actually credit still feel comfortable with you and actually helping people or telling people how to manage their finances. So things like that could prevent you from reaching the next level. So the understanding is credit affects more than just type of car I have, what I can afford. It affects everything in different aspects of life and truly needs to be respected. And again, credit's not hard. the discipline behind it is. So if anybody wants to see a budget, I can send some budgets out. I don't mind. The biggest thing when it comes to finances is being real, being realistic with yourself, being realistic with what you're capable of. Because if you say, you know what, man, I'm just not going to eat out. Okay, that's nice to say. I can't say that. I work every day, and you know what? I like to eat something different. So at some point, I'm going to eat out. It's not a realistic, play for me. So I would never hold myself accountable for that. But you have to be realistic in what you're doing, and you have to understand what your goal is at the very end of the day. You understand those things, you can make it happen, and then you can make credit work for you in every way. Is what it is. So I know that's it was about 30 minutes or so. I'd like to answer some questions if some have one. I believe I missed one. I do apologize about that. And if I misquoted your question earlier, I apologize about that as well.
All right, thank you, Mr. Autry. We do have some questions. I hope that was helpful for everyone. We do have a few questions in the chat that I will go ahead and read for you.
Okay.
All right, the first question was, if you have been approved for a mortgage loan, will it hurt my credit if I choose to go with another lender? The builder I want to use is not the lender's approved builders list. They are working on getting on the list. So that's one of the questions.
Oh man. I would hope a situation like that would have started off differently, and you'd have known up front, like, hey, these are the builders I need to select from, or this is what I have going on. So in that particular aspect, no, it really shouldn't hurt you, to switch and go somewhere else. Again, they're going to pull your credit. They're going to see that your credit has been pulled. But if this is what you're trying to do, it's not like you're trying to get over it. It's understandable. And they're just going to pull your credit and get a better idea, and approve you or not at that point.
Okay. This is from Mr. Rosa. I said, what is my recourse if a company tells me they are doing a soft inquiry, but later I discover it was a hard inquiry?
So with that being said, they have to have your consent somewhere to pull your credit. 95% of the time that should be in writing. In writing, it should state on there what it is. Now, if you run across a situation where the words on the paper say hard inquiry, but you were physically told something else, then you're going to have to go to somebody's supervisor at that place, because they can rescind it. Whoever's run your credit has the ability to rescind it with a letter, or they just basically document it and send it to the credit agencies, and they'll rescind it. Here, car dealerships, they do it all the time. They'll sit there and they'll run each other's credit the whole time, and then just start writing letters and rescind all those inquiries, so the credit is not damaged. It'd be nice if we had the opportunity to do that too, but we have to jump through hoops to make that happen. So they should have something that basically they can provide for you that says, in fact, what it was, and then you can dispute it through them. You can take information and dispute it through the actual credit bureau. So whether you're disputing it through Equifax, TransUnion, or Experian, you can dispute it directly through them with the provided documentation that supports what you were told.
Okay. Did I answer your question, Mr. Rose?
Mm-hmm.
Okay. The other question, it says, what if it was a construction loan? I'm not quite sure what she's asking about that, but maybe you can talk about that a little if you have any information on a construction loan.
To be honest, I'd have to know a little bit more about this particular situation. Okay. Construction loans are done differently based on different institutions. Like, so for us, construction loan, we need 20% down up front, because 20% down is what we use to start building, and then we start paying the builder to go ahead and make that home. So I'm more than happy to have a conversation more in depth with this individual. Just provide my information. And Clarsha, I am sending Clarsha an email in the morning that I owe her, because I haven't spoken to her in a few days.
Okay. All right, so I'm gonna open the floor for anybody that have any additional questions for Mr. Autry. I know it was a lot out there. Anybody have any questions for him? Because I know he gave a lot of information.
And I would like to say this. I'm leading a diversity group here in the Triad, who on the calls from Triad. But my goal is to partner with nonprofit minority businesses to help impact the community. So, if you guys know anybody that could benefit from, maybe perhaps a good conversation about funding, how we can get together and make an impact, I would really be open to that because that is in the process. We're gearing up for 2021. We have a lot of money to give, and we want to give it to the right place.
Okay. All right. Do anybody else have any questions? All right. I have one question about credit. When we talk about the credit cards and we was talking about maxing, what some lenders, when I was looking at trying to purchase a home and I just wanted them to look at my credit report just to tell me what I need to clean, some lenders was saying that, or brokers were saying that you should use only a certain amount of your credit cards. You shouldn't pay it off and just let it sit there, that you should be kind of paying off, and that's what I was doing. So I want to know what's the truth on that.
There's different theories on it. At the very end of the day, if you have 3 credit cards and collectively the limit's $3,000, and you're using one as an everyday, that's fine. You get any balance on any of those cards above probably 40%. They want to keep it under 30, 35%. You give it above that, it's going to show and reflect poorly, right? Now, if you got 3 credit cards and they got no balances, that it's not going to affect your credit in a bad way, I would say. If you're actively using your cards, well, it's just going to show us that you're actively using the cards. But please don't consider it a bad thing to have a card with no balance on it. The problem is people will get these cards, no balance, and actually never use them. So they're actually never using their credit. Nothing's reporting that they're being used. And those are kind of when those issues come in. But if you're a businesswoman, you're active, if you have an auto loan, you have 2 credit cards, and you have a mortgage, you know what? If the credit cards have no balance, you're still utilizing credit, and it's still a positive thing.
I did have someone who asked, Amanda, did you have a question?
Yes, I was going to ask, does debt from, let's just say 10 years ago, if you've, built your credit up and got your act together, does that debt still affect you now? Or if your credit score is good, you're good?
Typically it won't. Because it'll fall off by then. Now, if I were you, what I would do is literally pull your credit report is what I would do. So then you can see everything that's on there and you can know for sure what it is and if it's on there. But I would have to say, if it's actual debt that you had and this was 10 years ago and the credit score is good now, it's more than likely it's not on there.
But it would make my credit score go up if, let's say, I looked from things way back then, called them up and was like, hey, remember me? And try to
Well, if they're still on there, it has the potential to help. But 10 years ago, that debt's been sold to other people, I'm sure. So it's kind of hard to track down.
Okay.
Yeah. But yeah, pull your free credit report and see what's on there and see if something from that time period is actually on there.
Okay. Thanks.
I think we have Mr. Samuel all the way from Nigeria who is on, and you have a question, sir? I don't know if he can hear me. Samuel, are you on? He has his hand raised, so I don't know if he can hear. Okay, so maybe he can't. All right, so
actually,
okay.
Actually, I didn't join the meeting on time, though. I think I can remember you talked about the website. Can't really know what did it really talk about the website. It said something about website and the rest. I think I need to get more insight on that particular point.
The website we were talking about, I believe, was the annualcreditreport.com. And what that does is it's a free website that allows you to check all 3 bureaus for your credit and see what's reporting to each of them. And at the very end of it, you pay a small fee and actually get your score. But it gives you all the items on your credit report, and it also gives an opportunity to dispute them if you need to.
Okay. Thank you.
Yes, sir.
Anyone
So
else have
this
any-
is Portia. I have a question. So for those of us who are kind of juggling with business and using kind of our personal debt to finance some of the business because we're not really able to secure the types of loans that we need for the businesses yet, how do we kind of get out of that do loop where we can kind of exit from the personal side and leveraging the debt to the business side?
Well, we have to, in a situation like that, it's honestly, it's very similar to a startup. No matter what age you are or where you're at, if you're starting a business up, you're going to have to use, what you have personally to kind of get that going until it's been established long enough to say, hey, it can take the brunt of everything on. But oftentimes you'll have to do that. I am working with the SBA to help with your cause and what you have going on.
Yes, I know we're working kind of on the side, but I was trying to ask for the benefit of the group as well, because I think there's a lot of entrepreneurs in here. Wasn't sure if anybody else is running into that challenge or had a similar question.
But a lot of times it literally is, you have to get it going. The business has to show that it's viable, that it's it's doing something. Now, the only caveat would be is if your business, let's say for instance you started a carpenter business, but prior to that you worked as a carpenter for a different company, for 15, 20 years. And with that, you've been able to come over and kind of pull some of the clientele and things like that. So you have a little bit more, backing, stability for your endeavor and what you're doing in the business. Those types of situations will be looked at a bit differently. But if you're like, hey, I want to develop some land. I have some land. I want to develop some houses. Okay. It's going to be tough to borrow money from that. And at that point, what people typically do is partner. You partner with a builder who can assume that risk. That says, hey, we'll use my land. He assumes this risk, and we partner together, for whatever kind of deal you have panned out. A lot of times people will look to investors, to kind of help get where they need to be, so they don't not putting everything they have personally into it, and they don't want to take that risk. And then of course you have the personal investment where I say, hey, I'm going to take the equity out of my home and I'm going to put $60,000 into this business to get it viable, get it going. And once I get it going, I want to pay myself back. But a lot of times it just takes some time to get everything established to the point where the bank is like, we're comfortable with this particular client. We really want to help them do some lending when it comes to that. So I hope that better answered it, I guess, in a sense.
Yep. Thanks.
All right, so I wanted to ask a question. I know, there's some people, and I'll say myself, who they owe taxes to the government. How does that affect your credit or affect your ability to secure a loan, business loan or personal loan?
It doesn't. Okay, I take that back. So like, if you just, hey, I filed my taxes in, June, and I owe the IRS $2,000. That's not going to affect you at all, right? Mm-hmm. If you say, I haven't filed my taxes since 2015, and they put a judgment or a lien against my property, that's going to affect you greatly. So it just depends where they're at in that process. If they've placed any sort of lien on anything, mm-hmm. You're always going to have an issue until you clear that up. But typically they don't. They don't necessarily do that. So, imagine, I believe I read something today where someone didn't pay taxes for 10 years, right? They're still around, not in trouble. So it doesn't really affect you to that point unless they've taken it to the next step and put a lien against you or your personal property.
Okay. And I think my last question would be for a business loan. If you want to secure a business loan, is there a particular amount that banks or lenders look for that you already have? So say, for instance, they want to see that you have already $5,000 in your bank account before I can give you this loan.
No, not necessarily. And no, not just like a regular, transaction. Now, if you say, you're trying to do something a little different, and you say, hey, I got some money at, Wells Fargo, I'll bring it to you if that'll help my cause. Well, yeah, now we're leveraging. Now we're leveraging a relationship as opposed to just your request for this deal. So oftentimes I'll talk to business owners and, we'll make a deal. We'll do, $100,000 line of credit. And they're like, you know what? I need to take 25 basis off of that so we can make it a little more. But you write it up in the deal. I'll take the basis off of it, give you what you want, but you have to bring me $100,000 from the other bank, and it has to sit here for 2 years. And that's at that point you're kind of leveraging back and forth. So in situations like that, having money gets very helpful. But up front, it's not a requirement. Now, what I would do is give them the best you. Say, hey, if you guys potentially can help me out, that's fine. What I would like to do is do this with my business. I'll bring you my business deposits, and after that, I'll give you an opportunity to refinance my house. Because I know the rates are good right now. So the bank's going to look at it like, okay, even if we consider this a small risk over here with this entity, we're getting some other business and everything with it. So the more we call it sticky, the stickier the client, the more you can really get done because the more we know we got you. And at that point it kind of becomes a loyalty thing. And we can kind of leverage that. So I hope that answers.
It did. Do we have any more questions? Anybody have any more questions? Ask why you have the bank man on here. And I did put his. Go ahead.
Sorry. So like Miss Clarsha, I believe, me and my husband are trying to do like investment properties, get a single family home, move in there for a little bit, go to the next one, rent that one out, and try to do that same type of pattern every year to 2 years. Does it affect your credit if you have that many like loans? You have to get a loan for each one. And, I just, kind of wanted to hear that part of that.
Yep. So that's going to affect your debt to income. So they're going to look at like, let's say, you said you're married, right? Okay, let's say you're married. And let's call him Bill. So let's say you and Bill, buy a house and your mortgage payment $600, right? So we're paying $600 on this mortgage, but you know what? We want to buy this other house. So during that process, you have to show on paper that you can afford the house you live in and the house you want to buy with no other help from anyone else. And once you prove that, boom, you're good to go. But depending on where your debt is at in your current home, your primary residence, and before you make that move to do something else, there could be some options there using equity you have, or I would definitely suggest to refinance it no matter what, because that the loan you have it under is a primary residence loan. They probably would not let you and Bill have two of them. So you refinance it, it takes that out, and then you can go over here and buy another house. But now, what's really cool is you live in this house for $600. You're going to buy this other house. The mortgage is going to be $800, and you can afford it. Great, everything's cool. So you know what? Now we have a rental. So what happens with that rental? You're staying in this new house for 2 years. You have your old house rented for 2 years. And what happens is you claim that income. So it's on your Schedule C. And when it comes in, I'm sorry, not your Schedule C, but when it comes in, now we count that. So now it's like, okay, can you afford this $600 house? Yeah. Can you afford this $800 house? Mm-hmm. What about this other house that you're trying to buy? Well, I work, he works, and we have rental income that supports that. So now it helps with your debt to income ratio, but you just got to get to that hump, and I'm fairly certain you guys will get there.
Perfect. Thank you.
All right. Still have a little more time if anybody have any more questions.
Can I just piggyback off of that? So is it wise then for a husband and wife to kind of alternate getting the loans if they're able to secure it with one income? So in that scenario, the first house is like, say, financed through only using the husband's credit.
Mhm.
And then the second house is financed only using the wife's credit. And then they kind of alternate like that.
Yeah, there's absolutely nothing wrong with that. You know, if you guys have the credit and the income strength to support that, then yeah, I would say you have more flexibility and probably more options, at that point, because the two of you can actually do it separately or together, at the end of the day. So I think that's actually probably a good benefit you have there.
All right, anyone else have any questions? All right, do you have any last tidbits, Jonathan?
Live within your means. At the end of the day, things aren't as important as you think they are. And if you think about how you want to be, sit, feel 20 years from now, decide what's important today for that time and focus on it. Because budgeting is budgeting, discipline is discipline. If you cannot budget at $30,000, you won't budget at $100,000 at the end of the day. Credit can be utilized as a really strong tool and resource, or you can see it as a hindrance for a long period of time. It's up to you to decide. But at the end of the day, it won't happen today, tomorrow, next month. It's going to take time no matter what. So that's about all I have there, Margie.
Thank you. I appreciate it. I would say I just learned a lot within these 2 days that you have done this. It helped me out as well. Sometimes we just want to get the clarity of, because you hear so many things from different people. So you want to make sure you get the right information, because it can mess you up in the long run. So I thank you for just taking up the time and coming on and be for 2 nights and actually giving us the book of the finance, I would say. So I call it "Give Me My Credit." Tonight's website, "Give Me My Credit." So I thank you again, and I did put his email address in the chat. So if you have any questions, he is open to you emailing him with any additional questions. It may be something that you have but you just don't want the group to know about, or what so have you. But send that information to him, and I'm pretty sure he is open to answering any questions that you have. I really, really appreciate everybody coming on, and just to have this large group, I really appreciate it. It makes my heart feel really well that I'm actually doing something that helps other people. And please don't be afraid to contact me. You can contact me at mommclean77@gmail.com, or you can contact me at 804-517-4784. Before we go, I just have a couple of announcements. I think we have Mr. Rosa. I met him. He's also a part of my district, and he's my Masonic brother also. So I want to give him an opportunity because his organization is actually giving away a scholarship. So I would like for him to tell a little bit about his scholarship if he can.
Well, my wife is going to take her turn to speak.
Okay.
I just want to say thank you, Mr. Autry, for your tidbits of advice. It's definitely something that we.
Oh, it went silent. I think you're on mute. Back on mute. There you go.
Oh, what I was saying was I really appreciate Mr. Autry providing tidbits of wisdom to us tonight. These are some good life lessons that we can implement on a daily basis so we can get it back on track. What we are doing is offering a performing arts scholarship in memory of my mother through our website, rosa-foundation.com. We are putting this application out there for anyone that's interested, high school seniors that are interested in going into the performing arts, which is art, dance, music, theater. The scholarship is $1,000, and the postmark deadline is October the 19th. Once again, it's in honor of my mother, who was making some strides in ballet in the 60s and 70s at the time.
And we also are looking for sponsorship as well, and for donations, which you can also go on the website. I just put it in the chat. Thank you.
To be clear, that's that Rosa foundation.com. Is that correct?
Yes, sir.
Okay. I'm gonna check that out tomorrow.
Thank you.
Thank you.
Yes, sir.
And Mr. Rosa, is that open to in North Carolina, all over, or just the
Worldwide.
triad?
Worldwide. It's just
Okay,
not
good.
in North Carolina. We feel that we need to give other seniors that are in different parts of the world an opportunity, not just here in the United States and here in Greensboro. We want to be able to give it to anybody in any country or state.
Okay, well, I'll just share that in my other groups as well. I had just only shared it because I thought it was just the Gifford County area, so I definitely would share that
Thank you.
Thank
in
you.
my sorority groups and things like that. The other announcement that I would like to share, if I can, okay, is I am actually doing more than just this business wise. I'm doing a little bit more than this. So let me see if I can share the screen. All right, here we go. I'm in October, in honor of domestic violence, awareness month. I'm actually hosting a panel, and the panel is called "When Love Hits Home: Chronicles of Domestic Abuse." And so we have a young lady who is going to speak. Her name is Sabrina Mackey, who's also a victim of domestic violence. And we have a list of women who would love to share their stories of their bout with domestic violence. I actually was looking for men as well, because I don't want to have the myth that domestic violence is only happening to women, but it's also men as well. But sometimes, of course, it's hard to find those men who would like to share their story. But this will be happening Sunday, October 25th. You can register. The meeting ID is down at the bottom. But we would love for you to register so, of course, we can get a number of people who will be joining us. We'll be talking about this because of the fact with COVID happening, and it has really, domestic violence has really increased, as well as child abuse. And of course, domestic violence also leads sometimes to child abuse, but it also leads to our children having some type of mental issues, and those kids will turn around and become those persons who would actually inflict domestic violence as well, because that's what they see. So being an educator, I just thought that this would be very important for us to discuss, as well as my next topic probably after this will lead into how this will affect our kids. Also, some people know my father passed unexpectedly in March, and so he had a business called Superior Tire. We actually are looking there. My mother and I are looking to convert that into a community center where we can have different type of programs in the Fayetteville area, and especially down in the area of Person Street, where it's needed. This will be also an opportunity for people to rent it out for different events, and of course, summer programs. So we are also doing what we call the shoe size fundraiser. So what you do is you donate your shoe size. So if you have a 12, then you just donate $24. And so the Cash App is down there. Also, in honor of my father, one of the things he wanted to do before he passed was to offer hot meals to those especially kids in that area. So what I'll be doing is a soup kitchen on December 5th, which is also the founding day of my organization, National Council of Negro Women. And so we will be doing what we call the Day of Service. So on that day, I will be serving the community, giving out hot meals. And if you want to donate, want to sponsor, come and volunteer, this is my number that you can reach me at. Okay. And if you have any questions, of course, you can contact me on Facebook as well. So those are my announcements. And I want to say thank you again. Are y'all excited about the information y'all got today? I hope you are. You're excited about the information. I hope it was helpful. And I look forward to seeing you on others. If you have any webinars or anything else, please let me know. Tony, do you have any information that you want to give out, or anything that you would like to share? Anything about the documentary, or give you opportunity to, and you're on mute.
Okay, so the documentary, it actually is spun a little bit more because of things that are going on in Graham. If you are local, I'm actually from Graham, North Carolina, and unfortunately it has become very ugly there. It's ruined a lot of memories for me growing up there, seeing how I was actually in parades, a lot of events, charity fundraisers. I was very active in Graham when I was there. So to look back on it and understand that people that were viewing me at the parades and events hated my existence so much because of how they've come out of the woodworks for this specific statue. If you don't know anything about the statue that is in Graham in front of the courthouse, this statue is of a Confederate soldier that lynched the first Black elected official in Alamance County. The sheriff in Alamance County, Terry Johnson, is known for supporting white supremacy and KKK groups, and they do not get penalized for it. There are photos of some very nasty, disgusting things. It was just released on Yes Weekly. Their sheriffs talking to the people that were protesting against the peaceful protesters. So the reason for the documentary is to help people understand that it is not too late to unlearn racism. The worst thing that could possibly happen is for someone to defend themselves when someone is telling them that something they're saying is racially insensitive or that they're just being racist. Just listen to what the options are, listen to what you're saying and how it's hurting someone, and move forward from it. There's no need to defend it. If someone's telling you it's racist, and that's it. So just learn from it. And our purpose is to basically help people understand what their words, what their actions have caused to actual people that have gone through it. It's not politically driven. It's not about being left or right or this or the third. It's literally your personal experiences that you've affected and your hardships. And we feel like putting a human face and actually putting stories behind it of, first experiences of racism will actually help people see that they're actually humans. And it's not about politics. It's not about the media. It's not about any of that. It's literally tired of basically hiding your Blackness because of fear or whatever the case may be. One of the main questions that we're actually the last portion of our filming is blatantly asking, why do they hate us so much? Why do racist people really look at Black people like it's a problem, and why? And how it makes you feel. So there's some really good stories. There are mothers that have, biracial children, how, there were instances where, parents did not want them to date Black people. And then when they actually had a child that was, biracial, it opened up family lines, and they have a grandchild that is biracial. So you can't hate that race because you have a child from your blood. So lots of stories and instances where people have actually unlearned racism, and some things like people admitting that they were taught a specific thing and they didn't even know it was racist. And then when they found out, they've learned how to completely change their perspective.
That's good.
Yeah.
That's awesome. So thank you, Sony. I appreciate it. I don't live in Graham, but my church is in the area, as well as my organization is in the area. So I actually drive from Fayetteville to Burlington and also Gibsonville to do some volunteer work with National Council of Negro Women.
Yeah.
I'm the president of the Alamance Gifford section in that area. And so I work with them as well. So it's for me to drive from church and drive back to Fayetteville and see some of the things that I've seen on a Sunday.
Yeah, very disgusting behavior.
When is the documentary going to be ready again? I know you said it, but I forget. And how is it going to be disseminated, or where can
We
we
will
view
have it
this?
online. Yeah, sorry. Yeah, so we are planning to have it out prior to the election. That's our goal. We're actually filming this week. We're going to do a tour of Graham, riding in the car and actually going to some places that I've actually grew up and explaining some of the history and how even the high school that I went to was actually the first integrated high school in Alamance County. So probably within the next 3 weeks, it should be out. It's going to be out definitely before the election, and it'll be on Facebook, of course, and then other avenues. But I will definitely have Margie send out links to everyone on here when it is finished.
Of course, technology is always messing up, so my head was gone for a minute there. Thank goodness I had it on the phone. But I appreciate it again. Please contact Mr. Autry. I hope y'all learned a lot. Please find me, follow me on Facebook. You can follow me at Kemistry Fashion Boutique. Kemistry is spelled Kemistry, and you can follow me also on Facebook. You can follow me at Margie McLean Foundation Incorporated, and also my website, which is Margie McLean Foundation. .org. And so please, I look forward to always networking, and this pretty much that's what this is for. It's just for us to network and get information and support each other. So please make sure you follow each other, and I look forward to seeing you again. Thank you. I appreciate it. Have a good one. Bye-bye.
Absolutely.